I'm Matt Bouchard with REIT.com here in La Quinta, California for NAREIT's 2013 Leader in the Light Working Forum. Joining me is Nils Kok, co-founder and director of the Global Real Estate Sustainability Benchmark. Nils, thank you so much for joining us.
Thank you.
Now, the most recent GRESB survey saw record participation among U.S. REITs.
Yeah.
Now, what stands out to you regarding the U.S. REITs and their approach to sustainability compared to their global peers?
Well, I think in the US there has been a vision that Europe is ahead and Australia is ahead of them in terms of incorporating sustainability initiatives in the real estate sector. What we're seeing more and more is that the US is catching up. The US is very much focused on a pragmatic approach towards integrating sustainability. Very data-driven, action-driven, opportunity-driven. And that's where things may differ a little bit from, for example, Europe or Australia, where sustainability has been driven more by legislation. For example, mandatory disclosure in Australia and in Europe, whereas in the US it's really a bottom-up approach. So seeking for the opportunity, and if there's an opportunity to reduce cost and to improve operating efficiency, let's do it.
Now, from an investor standpoint, do investors in different countries view sustainability differently, and are those attitudes changing at all?
I think there's big differences between regions and how investors look at sustainability. Sustainability is a very big term. It's a little bit of a vague term, so I usually call it ESG, environment, social, and governance aspects. And depending on the jurisdiction or the region, investors only focus on corporate governance, then start to include energy efficiency and environmental issues, and then start to realize that social is a big aspect of sustainability as well. And that includes your own employees, includes your occupiers, includes the broader community and your supply chain. So I think that investors also from different regions have their hierarchy, start with governance, environmental and social. I would say though that whereas European investors and Australian investors were quite early when it comes to sustainability integration in investment decisions, we see that happening more and more here in the US and in Asia as well. So some of the larger pension plans do start to ask questions about LEED certification, your average Energy Star score, what have you done in your portfolio, and issues like Sandy in New York, extreme heat, it's fairly hot here outside, really make sustainability more tangible for investors as well.
And now, kind of playing off of that, the economic benefits of going green are becoming more aware to investors as well as companies. But are there any areas, kind of in general, where you see that perhaps property owners are not taking full advantage of some of the benefits?
Right. Well, I think we've really seen a shift from green as an opportunity to drive higher returns to green as an opportunity to protect returns. So we're more moving towards downside risk of not being sustainable, of not being efficient. I think one of the elephants in the room is occupiers and the impact of green building on productivity. And obviously, if you become more productive as an organization that leases space, or you sell more products in a store that you lease, well, that has a much higher impact than saving a little bit on energy consumption. So relating those productivity or sales benefits to financial performance, I think that's where things are moving. Australia is very much moving into that direction, but we need better metrics, we need better data, and we need more studies to kind of prove that relationship.
And in talking to a number of the REIT executives here at the Working Forum, one of the things they say is the biggest benefit about being involved in GRESB is being able to rank themselves among their peers.
Sure.
Why do you think it is so important for companies to not only quantify where they are, but to be able to turn and look and see where they are?
Well, I think if you look at a lot of the US REITs, sustainability reporting becomes more common, but obviously putting a report out there doesn't say anything about your performance. So being able to report on energy consumption doesn't tell you whether you're leading or lagging. Playing into the competitive spirit of the senior management, I think is very important when it comes to financials, where we all benchmark and where it's all about alpha, but also in sustainability. So making sustainability tangible, putting a number on it that has its limitations, but certainly also the benefit of playing more into the competitive behavior of REITs and their management.
And last question, what do you want the REIT executives here at this Working Forum, what message would you want to give them to take back to their offices?
I would want to take back to their office thoughts about how to improve the sustainability performance, the broader sustainability performance of their portfolio, learn from each other in terms of best practices, scale up opportunities that might be tried out at individual buildings, use GRESB to see where they stand relative to peers, show that to senior management, and then basically continue to drive that change. And I think at this working forum, when we have 30 REITs together, that's a very successful format to really share these best practices and to, at the end of the day, be a better competitor in the market space.
Great. Nils, thank you so much for joining us.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.